Yes, hello guys. Olanrewaju here, aka Larry B, and I'm also known as the Eminent Trader. And in this class, I'll be introducing you to currency pairs, base currency, quote currencies, quotes, and the likes in this class. So in this class, I will try to explain as much as possible so that you understand how currency pairs actually works, because that is the basic dynamics surrounding foreign exchange. Remember, in the previous class, I said it is the exchange of currencies for profits. Do you get it? It involves currency. So now what are currency pairs? We'll go into that extensively in this class. So let us get into it. Sorry. Currency pairs. So that is what we'll be going into, currency pairs. So what are currency pairs? Currency pair is the quotation of the relative value of a currency unit. Before I start, please, throughout the course of this class, try to get a note and a pen to write out all these important stuff, because you will need them during your quiz and your assignments. This will enable me to understand that you are going through the classes and you're understanding them properly. So what are currency pairs? Currency pairs is the quotation of the relative value of a currency unit against the unit of another currency. Let me explain again. Currency pairs is the quotation of the relative value of a currency unit against the unit of another currency. In simple terms, it basically means that no currency on its own has an absolute value. So to give value to a currency, you need to quote it with another currency. What this means is that you can't just say naira is so value, or dollars is so value, or euro is so value without quoting it with another currency. So the currency itself does not have an absolute value. It does not have a standalone value. So you can't say that euro is 100 or euro is 200. You see that it doesn't make sense except you quote it with another currency. For example, now, for you to actually tell the price of, let's say, GBP USD, that is Great Britain pounds. Let's say you want to talk about the price of GBP USD, you need to quote it with the price of another currency. Other examples are Euro USD, Euro JPY, Euro GBP, Euro AUD. So these are some examples of currency pairs. So this simply means that if Euro USD is trading at let's say Euro USD now is trading at 1.2040. So let's say Euro USD is trading at 1.2040 and coming. Let me just put price. So I'll explain very well. So let's say you are seeing something like this. So I'll be explaining to you in details. So this simply means that for you to buy 1 euro, you need $1.2040 to buy 1 euro. In this instance now, it means that you need 165 Japanese yen. JPY is Japanese yen. We already talked about this in the free class. So if you did not go to the free class, you can go back. Sorry. You can go back into the class. So what this simply means is that to buy 1 euro, you need 165.3 JPY to buy 1 euro. And in this instance, too, you need 1.25 Great Britain pounds to buy 1 euro. And in this instance, you need 1.05 AUD to buy one sorry, to buy 1 euro. Hope this is very clear. So I think that is that. And a currency pairs is made up of two major things. One is the base currency, and two is the quote currency. So these are the two major components of a currency pairs. These are the two major components of a currency pairs. We have the base currency and we have the quote currency. So what is the base currency? The base currency has more power than the quote currency, and the quote currency is what gives the entire currency pair its price. So for example now, which I already said before, this euro JPY now is 165.30. It means that for you to purchase 1 euro, you need 165.30 JPY to buy it, which I already explained. So for you to buy 1 euro in this instance, too, you need 1.25 GBP. Let me use more examples so that it won't be just euro that I'm talking about. GBP USD, let's say AUD card, let's say which other pair? NZD CHF. Okay. So let me use other examples to explain this. So let's say 1.3, let's say 1.5, Let's see. Let's just use this for example. Let me move this down. So in this instance now, what this means is that for you to buy one GBP, you need 1.3 US dollar. What this means when you see it in the market? This is what it means. So it means that for you to buy one GBP now, you need $1.3. For you to buy one AUD, you need 1.5 CAD. CAD is Canadian dollars, AUD is Australian dollars. We already talked about it. NZD is New Zealand dollars, and CHF is Swiss franc. Swiss franc. So for you to buy NZD, when you see something like this, you need 2.2 CHF to buy one NZD. That's basically what this quote, that's basically what it means. That's basically what it means. Let me move this to the side. We already talked about that. So let's talk about some of the popular currency pairs. 1 USD, 2 GBP, 3 EUR, 4 JPY, 5 AUD, 6 CAD, 7 CHF, 8 NZD. These are the major currency pairs. Sorry, major currencies in the Forex market. So these are the major currencies in the Forex market. Let me put the meaning. United States dollars, Great Britain pounds, simply euro, Japanese, Australian dollars, Canadian dollars, yeah, so those are the major and the most popular currencies in the Forex market. These are the most popular one that most people or most traders usually trade. So I think that is that. So let's get into the other area. I believe that part should be very clear. So you might see something like this. So what are base and what are quote currency? Yes. Before just open. Oh, I believe I still do it again. You don't know why that happened. It is currency. So whenever you see any quote like this is the base currency. So when someone asks you which one is the base currency, which one is the quote currency in any currency pairs, this is the base currency and this is the quote currency. This is the base currency and this is the quote currency. The first one on the left is always the base currency and the one on the right is always the quote currencies. So in this instance, like I've been explaining, it basically means that to buy 1 euro, you need 1.14 US dollars. It is very straightforward. This one is just the basics. You won't really need to know much about this in the long run, but this is just the basic knowledge for you to identify that, okay, this is my base currency and this is my quote currency. This is very straight. It is very straightforward. So I think that should be that for now. So let me delete all this. So I believe you already understand that. So the next thing is quote. Quote. So what are quotes? You'll be hearing something. I'm very sure you should have heard quote everywhere. A quote is a combination of two currencies paired against each other to make a currency pair. So a pair is when two things make up something to become a group or something. So, and I've already showed you different examples of currency pairs before. So let me even still put it out again. Euro AUD, Euro USD, GBP USD, GBP JPY. Okay. JPY, NZD, etc. There are so many pairs, but these are just examples. These are examples of currency pairs. And like I also said, a currency pair is a quotation of a relative value of a currency unit against the unit of another currency. And no currency has a standalone value. There's no currency that stands alone. It doesn't have its own value. And for it to have a value, it needs to be quoted against another currency, either as the base or the quote currency. But for a currency to have a value, it must be quoted with another currency to form a currency pair. You can't just say euro stands alone as a currency pair. Euro alone is just a currency. It is not a currency pair. USD alone is just a currency. It is not a currency pair. It is when those two are paired together that makes it a currency pair. I've shown you different examples regarding the price and everything. So it is very, very straightforward. So every single currency in the market is quoted in pair. That is how they have a value. Another example is USD NGM. You would have seen this on P2P market a lot, on Binance, on Binance or Bybit. You would have seen this a lot. So let's say you see something like this. Sorry. And you see the price at, let's say 1643. Let's say you see something like this. What this simply means is that for you to buy USD, you need 1,600 Naira. That is literally what it means. Do you get it now? It is very, very straightforward. Whenever you see something like this, the one on the right is what you need to buy the one on the left. This is the quote currency, and this is the base currency. Let me put this here again. This is the base currency. And this is the quote. I'll reduce the size. Let me reduce the size. So USD is the base currency, and NGN is the quote. And this is the quote currency. It's very, 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 very straightforward. I believe this is very, very straightforward. So let's still get into the next one. So in the market too, you most likely see something like this on your trading view. Let me use this as an example. You'll be seeing something like this. So whenever you see something like this, it means that the market, there's a price change across the market. It means there's a price change across the market. So this is the current price. So let's look at this now. This means that for you to buy one gold is XAUUSD. So for you to buy one gold, you need $2,458 to buy 1 ton of gold. For you to buy Australian dollar at this point in time, you need 0.66 US dollar. In this instance, too, for you to buy euro, you need 1.5 Canadian dollars. And for you to buy euro, you need 0.949 Swiss franc. And for you to buy euro, you need 161.5 GPI. This is a live chart for me to explain properly to you. For you to buy GBP, you need 1.75 CAD, which is Canadian dollars. Like that, like that. For you to buy New Zealand dollars, you need 0.6029 US dollars. Hope this is very, very, very clear. So whenever price is going up, you'll be seeing the arrow. Let me adjust this so you just see. So whenever the price, this is the change here, you see the price change for 24 hours. You will see an arrow here also showing that the price is going up. You'll be seeing plus or minus here also. So all this means is that if you are seeing red, it means it is bearish. If you are seeing green, it means it is bullish at that point in time. So you'll be seeing the price change and everything. So I'm currently on the buy here, looking forward to more buys. So I think that is that. I think that is that. What else? What else? So when the currency case is bullish, so let's go back to this now. Let me use this as an example. Oh, shit. Let me just use another one. Let me use GBP USD. Let me use GBP USD. So when the currency pair is bullish, remember I already told you this is the base and this is the quote. Let me put the line in between. Let me just use this. So when you see GBP / USD, just like we saw in the chart now. So when you see something like this is the base and this is the quote. So whenever the pair is bullish, it means that the base currency is the base currency is strong and pumping, and the quote currency is weak and dumping. Let me explain again. So whenever you see something like this and the market is pumping or the pair is bullish, that means the price is going up. It basically means that this base currency is the one that is pumping and strong, while this one is dumping and weak, and vice versa. Vice versa in the sense that if you see this currency pair together like this and it is bearish, it means that this base currency is going weak and dumping, and the quote currency is pumping and it is strong at that point in time. So, and GBP alone does not stand alone as a currency because it does not have a value. USD does not stand alone. It is just a currency. It is when it is combined together or paired together that it becomes a currency pair. And this is what gives it an actual value, which I've already shown here. Without this kind of pairing, they do not have a standalone value. So BTC alone does not have a value if you do not pair it with USD or any other currency. Gold does not have a particular value unless it is paired with a particular currency. Hope you are getting the dynamics now. So that is basically how that works. So when you look at most pairs, the first two letters usually denote the country. So let me get into that also. So whenever you see most pairs, the first two letters usually denote the country. Let's just use it as the example. Make sure that I'm using the same. Oh, euro. I was wondering, there's one missing. So I've already done this before. Not clear from Australia. So if you look at these pairs now, you will notice that every of these currencies, their first two letters usually denote their country. There are so many pairs in the market, but these are just some of them. So look at this: US, United States; GB, Great Britain; AU, Australia; NZ, New Zealand; JP, Japan; CA, Canada; NG, Nigeria; EU, Europe. So you can see that is how they point out their currency in the market. It makes them stand out. So once you see GB, you know it's Great Britain. Once you see US, you know it's United States, and like that, like that. So I think that will be all for currency pairs and base currency, quote currency. I believe by now we should already know what is a base currency, what is a quote currency. You already know the different currencies. You already know that a currency does not stand alone, except it is paired with another currency. You already know the popular currencies and their full name. You already know the psychology behind the pricing of a currency pair. And you already know that a combination of two currencies creates a currency pair. And you already understand the bullish and bearish analogy at the end of this class. So at the end of this class, you should be able to identify all the things that I have just spoken about. And there will be a quiz after this video for me to ascertain that you understand what I just explained in this class. So I'll see you in the next class where I'll be talking about pips, leverage, lots, and margin. Pips, leverage, lots, and margin. This is a very important part that every trader as a beginner or advanced should actually know, because these are the things that can make or mar your journey as a trader. Your leverage is important. The lot size is important. Your margin, your pips, the knowledge of these things is very important in your journey. So that is why it is in a separate class. So I'll be able to explain properly in details such that you will understand perfectly, because there will be some calculations here and there. So if you miscalculate, your account might just be gone. So that is why it is very essential for you to understand this part very, very well. So I'll see you in the next class. I remain Olariwaju, aka Larry B, or the Eminent Trader. Thank you and God bless.
Follow me for more educative contents like this.